Welcome guys to our next video. So in this video, it's a part 2 of what we did in market structure 1.0, right? So previously we looked at the different trend, uptrend, downtrend, and sideways market. I draw some illustration, went over the structure in detail. Now I want to take the opportunity to go through a few examples on the live chart and give some live examples of the different trends, right? So the first one I'm going to start with is a uptrend, right? So we're going to look on the chart and try to identify some of these trends. So the first one, we're going to look at a downtrend first, right? So if we look at our screen, we're just focusing on this area. So this was when the market was moving in a downtrend. So we see the market creating high, pushing down, creating low, market pulling back, lower high, lower low, 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 lower high, lower low. All right, downtrend. So let's see if we can spot a few more examples of a downtrend. So if we look right here, downtrending movement, pretty much the same concept, market pushing down, lower low, lower high, lower low, lower high. All right. So I want us to look at this example right here. So we're going to focus on all of this here. So let's say we start from up here, high, market push down, creating a low, break structure, came back, retest lower high, market push down, lower low, lower high, lower low, lower high. All right. Market push down, lower low, market push up, lower high, market push down, create equal lows, because at this point in the downtrend, you notice how the market pretty much came back to the same low. It didn't get any lower, but instead it reacted to the same level, creating a equal low point, right? We push up, right? This was the example that I was talking about in the illustration. So you notice what happened here. Still in a downtrend. The market, after creating the equal low point, we push up and we pretty much targeted the previous high. But as you can see, we pretty much, the market closed above the high, the candlestick closed above the high, and then the following candlestick just closed back below, right? So it's almost a little fake out vibe we're getting right here. So if we should draw a little rectangle zone, so where the market pretty much did a fake out. So pretty much respect the high at this point, right? We're still respecting the high. So we're still in a downtrend. Market push down. As you can see, this time, instead of creating an equal low, we created a higher low. All right. So you guys see now, we actually went through these stuff, and on the live chart now, it's pretty much it's the same thing, right? Higher low, the market pretty much push up, pushing little above this previous point. So it's now at a higher high, right? But what happened next? The market pushed down, creating a higher low. The market push up, creating a higher high, right? And then what happened? Boom, break down, taking out all these higher low points, now creating a lower low. The market pulled back, came back for the retest to this previous point, now creating a lower high, right? Pushing down, creating a lower low, because what? We're no lower than this previous low. Then what happened next? The market pulled back, targeting the same high. So if we should extend this zone right here, we notice that we're rejecting the same high. So equal high point. What happened next? The market pushed down, creating lower low, right? Pull back, lower high, right? So as you guys can see, based on the illustration that we looked at in the previous videos of the downtrend, the one that was more complex, you're seeing that we're seeing example, live chart example right here, because this is not your textbook way of the downtrend, right? This is not your textbook way. So you definitely have to understand the structure to know that this market is still in a downtrend, because all along, even though we're getting higher lows to form, that is showing sign that buyers want to take over. But they, like I said, they don't take over until they take out the selling orders at the highest completely. So we see here, right here, where the buyers try to breach the high, where we started to see the high started to push a bit higher, but the sellers were so strong that they caused the market to just sink off. So we just push down, right? We push above the high, yes, but we didn't break to say maintain, right? It didn't maintain the break that it did, right? So it's almost a little fake out vibe, and then sellers stepped in, push price down, break structure, maintain, and continue in its original trend. So trust me guys, once you get the principle behind these things, the market cannot confuse you. Remember, right? Remember, cannot. So you just have to ensure you get the concept, guys, so you don't form fool to the market. Right. So yeah, let's look at some uptrend example now, guys. So we look at some downtrend textbook and not so textbook. We have the downtrend. Now let's look at some uptrend examples. So reset, clear, and let's look at some uptrend. So if we look right here, we notice that the market pretty much is moving in a upwards direction, the current market. So we pretty much created a low here, market push up, created a high, higher low, higher high, higher low, higher high. Market pretty much pull back, creating a higher low, equal highs, and now it look as if we want to go back down. But this movement that we're zooming on, it's an uptrend. Why? Higher highs and higher lows are being created, and the market is pushing to the upside. All right, let's look at a few other examples. If we should zoom in here, this is also an uptrend. This is also a uptrending market. So see the market creating lows, highs, higher low, higher high, higher low, higher high, higher low. All right, higher high, higher low, uptrend. Let's look at some more examples. All right, so let's look at here. Let's look at here. So we notice the type of movement that we have right along here. So market pretty much is going upwards, but this is not your textbook way of the what the uptrend normally looks like. So let's zoom in and we see, once we understand the principle, guys, behind the uptrend, it cannot go wrong. All right, market cannot make a fool of you. So boom, we start the trend from down here. The market push up, we create a high. Market pull back, higher low. Market push up, as you can see, equal highs, because the market came back and it targeted the previous high area, rejecting it, equal high. Push down, higher low. Push up. You can see now with this structure, the market pretty much take out the previous levels to the left, right? Now creating a higher high right there. The market pull back, higher low. Lower high right there, higher low, right? Market push up, higher high. Then what happened? We push down. I love what we see in these examples, you know? Trust me, guys. Once you understand the structure, cannot form full of you. So look, the previous low, we find, look at this. So look at the movement right here. So we're in the uptrend. The market create a higher low point, bullish engulfing candlestick, and we spiral to the upside. Reach an area where we see the market reverse. This reversal brought us below, a little below this point. So you break, and then on the next few candlestick, back up in the zone, and then we push to the upside, right? So this is what you call like a fake out. So the market dip below the zone, make it look as if we're going to go to the downside, and then we just resume back to the upside, right? So we looked at an example like this previously in the illustration. So as you can see, we still maintain, even though we slip a little below the previous higher low point, we still maintain structure. So this right here is a little fake out to the downside, right? Price resume, and we swing to the upside. Buyer stepped in, a slightly little lower high, right? Higher low, market push up, still maintaining highs, right? Equal highs right there. The market pull back, slip below the lower little, but what? We push back up. See this candlestick just push back up. So a little fake out again, right? Sometimes the market will do stuff like this. Sometimes it will do stuff like this. Yeah. So we still maintain, we push back up, creating a higher high, taking our previous structure to the left, right? Taking our previous structure to the left. So if we should draw a zone up here, if we should draw a zone up at this area, right? Market pull back, maintaining low, reject there, push up, reject, push up, creating higher high, come back to the zone, reject. So prime example of what I mean. As the guys see, you know, we're in a case where we see the market is moving in an uptrend. In some instance, we see the market creating lower highs. We see the market creating higher highs. Yes, higher highs, yes, as well as equal highs, right? But at the same time, the directional flow of the market keeps on moving upwards, right? If we should look at the lows, who is in control of the uptrend? Buyers, right? So buyers will cause the market to push up. Where are the buyers in the market? They are located at the low points. If we should observe the lows, they kept on getting higher and higher, even though at some instance it looked as if sellers might want to take control. We just see the buyers shoot price back up. So buyers were in control throughout all of these movements. We were maintaining structure, right? We were maintaining structure right through. So throughout all of these movements, buys. We're not looking to sell. We're not looking to sell. We just buys because what? The market is in an uptrend. So why we should not want to buy the market? Buys, we're just locked in, just look at straight buys. right? So uptrend, downtrend. Some pretty decent example. By this, you guys should be cementing market structure, right? So now we're going to look at breaking market structure because that is very important because we touched on that, But let's look at some examples, some live chart examples of when the market actually breaks structure and shift from an uptrend into a downtrend or, vice versa. So let's look at this example right here. We can clearly identify before that the market was moving in this upwards fashion, it was going down over here, right? It was moving in a downtrend before we started this uptrend. So the movement of the market previously before was like this. So we create high, push down, lower high, lower low, lower low right there, lower high right there, lower high, lower low, lower low, lower high, and we're down to this lower low point, right? What happened next? Market push up, creating lower high, right? Lower high right here, because it's actually lower than this previous high. But what? We started creating higher low points. So that's a sign. The higher low that we create right here. So the higher low point that we created right here is a sign of buyers wanting to take over. But like I said, we don't look for a change in trend until we get a break in market structure, right? So this higher low was a sign that the market wants to change trend from a downtrend into an uptrend. But it was not clear until this happened. So the market created this higher low and we push up right here, creating this level up here. This was a high, right? And all along we were creating lower highs, going down, lower highs. We could even get a trend line and we trace it. We would see that the market was pretty much trending downwards, creating lower highs. And then what? We create a higher low and then we shoot up, taking out market structure. But the retest is very important because the market can easily do like a fake out. So usually I suggest waiting on a retest. So what happened next? The market pretty much came back. The market pretty much came back, right? After creating the higher high, came back, retest this previous lower high point where it had some resistance, market push up, break, retest, form some support. Also, it's a new higher low point because at first we created this higher low, we push up, break structure, creating this higher high, right? We pull back, now creating a new higher low. So now what? We push up, higher high, higher low, higher high, higher low. So we see we break or we transition from a downtrend into an uptrend with the indication of the break of structure. How did we notice a break of structure? Because the market take out a high in the downtrend, right? Sellers are at the highs, and once the market surpass a high in the downtrend and it pull back and maintain structure, then we're looking for price to transition from a downtrend into an uptrend, right? So let's take a look at a few more examples in break of structure. So right here is a similar setup again. Similar setup. Market trending downwards, downtrend. right? Lower low, lower high, lower low, lower high, lower low, lower high. Oh, pretty much the same place, yeah. Yeah, similar, pretty similar example, you know. Break, market trending downwards, market break above, breaking market structure, taking out highs, all right? Taking out highs right up here. The market break, pull back, retest, and we started this uptrend, all right? So now let's look at some example when we actually break the counter, break the uptrend for a sell. All right, before we look at that, guys, look at this example right here. Remember, we spoke on three ways how the market move: uptrend, downtrend, and a sideways or a consolidating market. And I said, usually after a consolidating or ranging market, is either we're going to continue in the original trend that we were moving in, or we're going to do a trend reversal. So if we should look at this example right here, the market was pretty much moving in an uptrend, creating higher highs and higher lows, right? Upon the market reaching up here, you notice that the market pretty much slowed down where we were ranging between resistance and support, bouncing. No definite trend was present at this point. If I should get a rectangle and drop it right up here, notice that we weren't moving either in an uptrend nor a downtrend, right? So we're bouncing, support, resistance, do a breakout of the area, we break back in the area, then we started to go in this downtrend. We break structure, right? And then we started moving in this downtrend, right? So this is an example where we were moving in an uptrend, market started to move sideways, and then we transitioned into the downtrend, right? So as I can see, we took out structure, the market started to range, we pushed down from high to low, we started creating lower highs, lower lows, and so forth, downtrend, right? So guys, like I said, if the market is changing from an uptrend into a downtrend, a break of structure must take place. Where we look for a break of structure? When the market take out a low. When the market takes out a low, that's when we look for a change in market trend to the downside. So let's look at this example. So with this example, uptrend, low to high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. We see market create a double top rejection. A double top rejection right up at this level. Reject, reject. Then what? Market push down, creating a higher low point right there. The market push down, break structure, retest. So we break in market structure, we take out a higher low point, the market push down, creating a low, market pull back to the level to retest, creating a lower high, we push down, lower low, market pull back, lower high, equal low, lower high, push down, lower low, lower high, and a new trend, you know. So it basically transition from an uptrend into a downtrend with the breaker structure. So the market has to break structure before we transition, guys. So until I get a breaker structure and we're moving in an uptrend, we're buying until we see a breaker structure like the market wants to sell. Then we look for selling opportunities in the market. All right. So, all right, look at this example. So this is also an example of a case where the market, so this example right here, notice that the market was ranging. So we break structure, we started this new downtrend. But the market reached here now and we started to range. Right? So during this period, goodly orders were being filled because the direction that we move in after the range was to the downside, right? Downside is continue this downtrend until, you know, started some little choppy movements. But guys, trust me, these principles, once you get them the right way, you apply them on the chart because you will come across them. But once you have the understanding to know what to do, what to anticipate, what to expect with each movement that you will come across in the market, then you will be good, guys. So this is market structure 2.0. Hope you learned something. Catch you in the next video.